One of the signs of that we're nearing the end of the year is running out of silver eagles. That's typically something that happens late in the year, and it's been getting really tough. Even on backdated, it's been crazy. So maybe if you could, I wanted to talk to you about a couple topics. We'll get to those, but I'm going to give you a chance to first give us the from the ground, boots on the ground update in the retail precious metals investing space. The topics we're going to get to after that are submitted by clients and viewers ahead of this interview. One is about central bank digital currencies, CBDCs, which is the big boogeyman specter that we've all been watching out for and worried about for the past 5 years or so. And then the executive order from Trump saying, don't worry, there won't be any CBDCs in the US. I'm going to make, by executive order, no CBDCs in the USA. And then the Genius Act comes out, and lo and behold, if you look at the fine print, and we can put a link in the description of this video to an expose that talks about that, it looks like all the earmarks that we were worried about CBDCs are going to be there. That's what's coming our way right now under stablecoins. The second thing is a question about the health of the Japanese bond market, which has been looking sicker and more concerning for some time. Wanted to get your update on that. But if you want to hit either of those first, otherwise we'll save those. And if you can hit us with how is the retail bullion supply chain holding up, and the availability and premiums direction. And it's probably worth noticing that silver is up another couple bucks today. So it's remarkable what's happening here at the end of the year.
Yeah, it is. Only 2 days. Well, today's day 3. I don't have the numbers yet, but 2 days into the December delivery month, and there's already been 23,970 gold contracts that have stood for delivery. That's 2.397 million ounces, and plus 8,305 silver contracts, or 41,525,000 troy ounces issued and stopped so far, and the month has just started. It's also relevant to note that in November, which I would say was not normal, the silver deliveries ended the month at just under 20 million ounces, about 19.7 million, which it's really crazy because November is not a scheduled delivery month for either silver or gold. There was 1,267,000 ounces of gold delivered. Issued and stopped is the correct terminology. But the first day, this month, the December contract, day one, we saw 7,330 contracts stand for delivery in silver, which is 36, almost 37 million. That's more than $2 billion worth. And although it's not a record, it's close to it. April was the biggest record of just under 12,000 contracts. But to see a 2-day, that's day one, and 2-day obviously added more, but it's just insanity where there's already been 2.4 million ounces of gold and almost 42 million ounces of silver delivered in 2 days. This is the same type of volume that we've seen all year long. And, it's funny, you and I started talking about this in 2020 before anyone did. And now it's just mainstream mainstream in our business. And I think this will continue until it doesn't, meaning until stuff is just depleted. And it's becoming more and more obvious that this is an imminent deal. At the same time, you have one of, if not the largest short position in COMEX futures market, along with a massive short position in SLV, one of the largest ever. And at the same time, you have the LBMA, which is running on fumes. And, it's a situation where the delivery mechanisms are breaking down. Almost 90 million ounces have been delivered off of COMEX this year. And since October, pardon me. And I don't know, since October 1st, 90 million, it's accelerating at a level that I don't think people understand or take for granted. And I think the way that you break that up is just to simply say that, let's make an analogy, right? For years, everyone pretended that, let's call it a cardboard box was full of cookies. There's a picture of a cookie on the outside. And the thing of it, and they would trade that. But now everyone is saying, no, I want the cookies. And people are realizing that the box is pretty much empty. And when that happens, this pretend cookie game, which you could call the derivatives, falls apart. And real cookies, gold and silver, become much more valuable. And that's why prices are rising. And why the dollar and other currencies may look weak when the truth comes out. So, yeah, I think it's a big deal. There was this report that JP Morgan shifted its offices to Asia in the middle of the night, that they were told that the people had like 5 days to move their family and everything to Singapore. I believe that is false. So everything that I'm reading tells me that that's not true. I guess we'll find out and we will see, but I know a lot of people have been asking about that. The bottom line, then again, to me, is that the market runs on trust. And when you believe that you'll get delivery of what you were promised, and that trust has been built up over decades, then the system works. And you buy a contract, you can stand for delivery. The metal's there. That's why COMEX has set the price of gold and silver forever. And the analogy is like a bridge that handles a whole bunch of weight until it doesn't, like the 35W bridge in Minnesota that collapsed that I drove over 5 million times. And you're seeing that in London. You're seeing that in the COMEX now. And I don't know. I think that this is going to be a story that gains a lot of traction over the coming weeks and months. I think that the price of silver is just beginning. I really, truly, truly do. And that nonsense of a outage, a glitch and an outage of air conditioning at the CME, a cooling failure, is a bunch of crap, because only the metals markets went down. You know, the other CME markets like the bonds and the FX and the repo and the equity futures, well, they stayed online. It was a technical failure isolated to only one asset class and low volume that day. Yet the whole thing went down. To me, it just is telling you that things are breaking. And I don't know. I think that this is just the beginning. We saw 12.5 million ounces were transferred out of the COMEX registered category on November 26th. So, you know, where's it going? Who's buying it? How caught are they? These are the things that I would be focusing on right now. To me, that's the most important thing to talk about today.
Your comment about the COMEX reminds me of what happened during the nickel market run-up a couple of years ago. Our mutual friend, our dear departed David Smith, talked to us about that at the time and said, this is a private club. They can change the rules anytime they want. It reminds me of George Carlin's statement that it's a big club and you're not in it. But any comments that you have about the fact that on Friday, when silver was breaking out to a new all-time high monthly close, that's when all this shenanigans seemed to happen, when the trading was halted for 11 hours on the COMEX. Any comments from you about that?
I would just simply say that if a market loses trust in how prices are discovered, or if it can quickly shift the rules, so too will the price discovery. Will shift elsewhere. And to me, all roads lead to the same place, and that's Shanghai, which becomes the price mechanism for physical silver. It will take over for the COMEX. And, you know, when you play these games, we've seen it now in London with the nickel market. We're seeing it here. It's what they did to the Hunt brothers. They changed the rules. They'll raise margin requirements. They'll do all of these things. But when you end up seeing, when you end up seeing a failure of trust, a massive breakdown in trust, I believe that shift will happen. And, it will kind of be like London losing its grip on oil pricing, and move to the NYMEX. And, they ran it for a long time. Now they're an afterthought. The same thing will happen here. I believe that the world will be so angered, if you will, by the fact that this has been a game that has been played for a long time by the West, that it will move to the part of the world that, the center of gravity will move towards Asia, I guess is what I'm trying to say. So, yeah, I think that's going to happen. I don't know when, but ultimately, in a world of probabilities, I'd put a high level of certainty on that at some point, it just moves to the part of the world that is cash and carry instead of promises and rehypothecation. In other words, you buy in Asia, you pay your money, you get your bars, and out you go. And before you buy it, you have to buy a bar from one of the pre-approved refineries, and they laser etch the number of the contract that you have on that bar. There is no shenanigans there. It's all about shenanigans here in the West.
How about any comments from you? You already mentioned that this increasing demand because of people wanting the real goods, wanting the real article, the genuine article, is a underpinning that is really providing a floor underneath and increasing demand for physical metals, as evidenced by offtake from exchanges and so on. Any comments from you on silver's resulting breakout, which you did mention the price? If you watch the prices, that's really something it's an after effect. It's the tail that's being wagged by the dog of the real physical demand. But any comments from you on either the price action recently or going into the end of the year, or physical availability of metals in the retail space?
Well, it's interesting. The technical analysis would say you take the cup and handle when it breaks through the handle, which it has at over $50, that you take the top of the cup in 1980, which was 50, the bottom of the cup, which was $4 in the 90s, and the difference is 46. You add it to the top, and that would say $96 would be the next technical resistance level, if any, or that would be the projected next place to go. And if you take a 42-to-1 ratio right now, or even call it 45-to-1, where it's averaged for the last 100 years, the silver to gold ratio, even though it's been coming out of the ground for 5,000 years, it's 16-to-1, and now it's 7-to-1, meaning it's depleting in nature. The price ratio, largely because of, in the Western world, gold's role as a monetary metal and silver's role in industry, it's average about 45-to-1. So you take gold today at 42.40 and divide by 45, and what do you get? 42.40 divided by 45 is $95. Well, isn't that interesting? That would be where it would tell you to go, where you take the top minus the bottom, which is 46, add it to the top, that would say $96. So, I mean, if you were to see silver at the end of the year at $96, it would not be crazy at all. And if you take 42.40 and divide by 7, it's going to be somewhere around $600, 605. As insane as that sounds, that would match the geologic footprint right now. So yeah, I think silver is the asset of a generation. And I want to always hammer it home. I'm not telling people to buy it to become wealthy. It is wealth. And the biggest money in the world is showing you that. The sovereign wealth funds and the central banks, who have now largely reclassified silver a critical mineral. The U.S. government has. The EU did it in 2023. China just did it, and they are restricting exports. And China, as we've said ad nauseum on your show, the second largest producer in the world, is flying to Peru and Mexico and buying doré and concentrate, paying twice what the rest of the world will, and ship it back to refine it. If they're the second largest producer, then why the hell are they doing that? Because it's worth far more than the currency used to buy it. The prices are wrong. They've never been allowed to reach full price discovery when you have the largest concentrated commodity, concentrated short position of any commodity of the 1,000 plus traded on COMEX for years. It just speaks to the why. Why would it be the largest short position in this tiny little commodity? It's not for these banks to make money, is it? Sure, they do, but is there something bigger behind it? And we've talked about that forever. So yeah, what we're witnessing right now is the inability of the players that have used the Western dominance, which is big checkbooks, big pockets of cash, to continue to suppress the price naked. It's now an existential threat. And you're seeing that. The rumor is the reason they stopped is there's one big trader who took possession and would not roll it over a stamp for cash delivery, perhaps an Asian trader who wanted over 400 million ounces of silver. Give it to me. And so, all of a sudden, the cooling breaks down over Thanksgiving in one of the most thinly traded markets of all. So there's virtually no activity, but just those servers broke down. Right. So the point of it is that this signals, just like the LBMA said, sorry, it's not L plus or T plus 1, it's T plus 8 weeks. Right. We don't have enough manpower or trucks. The Western system is crumbling under their own narrative, and they are losing trust. And that ain't good when a system is completely built on trust and it starts to, as the water recedes, what's the old adage, you see.
Warren Buffett said, when the tide goes out, you get to find out who was swimming without swimming trunks. Yeah.
Right. And I think that's going to be a grotesque picture before it's all said and done. And that's why I think you're seeing a different narrative unfold amongst these banks, that maybe the game is over, and survival would mean breaking ranks and covering and getting out. You see one of those European banks do that, and then the whole game just implodes as the price skyrockets and shorts get squeezed and they cover, pushing the price up higher. This is a big deal, and I think it's just beginning right now.
We also wanted to talk about two more topics that were submitted by viewers. The first one is the Trump administration's executive order banning central bank digital currencies in the U.S. That was signed several months ago. And then the Genius Act was signed more recently. And you look in the fine print of both of those, and you'll find the crypto-backed stable coin, the idea electronic, backed by the dollar, and by the dollar only by the treasury. So creating synthetic demand for the treasury and captive market. But basically having all of the distasteful or toxic characteristics that people were worried about from CBDCs, such as being able to monitor and track every single transaction that you do, being able to identify you and filter you and block you or lock you out if you don't play by the rules, and being unable to withdraw any funds, as we now can still with cash, and do things, have something outside the system, such as gold and silver or cash. So that's the first thing. Is any updates from you on this, the progression, the unveiling that we keep seeing a little bit more of the truth come out about what this whole stablecoin act is actually, who it's working for and who it's working against, before we ask about perhaps the implications on gold and silver from there?
Well, I mean, I think it's all intertwined because Bo Hines, who was Trump's crypto advisor until August, is now the CEO of USA Tether, which is already Genius compliant and will get the lion's share of all the stablecoin issuance backed by U.S. Treasuries, which, to your point, gives synthetic demand for the Treasury. But the interest on those coins is not transferable. If you buy something and the stablecoin is created backed by Treasuries, you spend it, the stablecoin gets burned. It's done. But the interest that was generated on the Treasury is not transferable to the holder of the stablecoin. It has to be kept by Tether, who then is buying gold. They have almost $13 billion in gold. They were just at the Beaver Creek Mining Summit. So there's a lot to say about the stablecoin in terms of the ultimate benefit to the gold holder, which devalues the dollar, which we've talked about. That's what they want. The debasement trade. You haven't seen mainstream talk about the debasement trade. Makes paying off your debt easier. And we've talked about how they could develop a roadmap to bring back manufacturing. That is a key part of it. The continuation synthetically of demand for the Treasury market, which has lost demand and is continuing to lose demand, but that synthetic demand will then be used to take the revenue from it, drive from it, not give it back to us who hold the stablecoins, but buy gold with it. And I wouldn't be surprised if there was a wink, wink, nod, nod between Trump and Tether. You're going to give us that metal. You're going to sign a contract discreetly, maybe even through this exchange stabilization fund, and you're going to sell it to us at some point. Maybe. But anyways, I digress. When you talk about what it could have in store for you, yeah, they have AML, KYC, and KYT compliant technology built into the software. Know your client, KYC, AML, anti-money laundering, KYT, know your transaction. They will know who you are, where your money came from, and what you're buying. And you're right, it is a central bank digital currency masquerading as a stablecoin. The big difference is that instead of, it's the CB, there's no central bank. These are independent third-party companies. But isn't it interesting that Trump's CryptoCzar is now the CEO of this new division that is going to issue the USA Tether tokens? Interesting how that plays out. It's just as interesting as Goldman Sachs saying if the Fed loses independence and the market gets whiff of it, gold will go to the moon. Well, who just took the vacated spot? Stephen Mirren, the head or the gentleman who wrote the Mar-a-Lago Accord, Trump's advisor. These things are not by mistake or by accident. They're by design. And so, to your point, yes, it will have, I believe, all of the characteristics of a central bank digital currency only issued by a third-party entity, that the feds will control the on-ramp and the off-ramp. And so it's the same thing in essence. And I think people should be concerned about it for sure, but it is here and it is going to happen. It is the only way that they will achieve, I think, what they're trying to do through devaluation of the dollar and keeping interest rates low synthetically on both cases. And that devaluation of the dollar will be through the continued increasing purchases of gold and silver with the proceeds behind those stablecoins that are backed by treasuries. The interest on those treasuries not transferable. It's a huge deal, but to the average person, yeah, I think you are just as surveilled as if it were a central bank digital currency for sure, 100%.
The other aspect of that is not being able to opt out, not being able to go up to the bank when there's mass adoption of this by the public. We think, oh, gee, it sounds great. It's all about safety and security and keeping the bad guys.
And quick, because remember, like if you were to go buy a new Lexus at the Lexus dealership and they're like, okay, well, we can't take a check from you, Dunnigan. I'm sure you're an honest guy. We need a wire. Okay, I'll be right back. I'll run to Wells Fargo. Well, now you can just go, boom, just like Zelle. It's in your account. Thank you. Let's go. Can I have my car? It's expediency also. And it's, Convenience. That's what they'll tell you. It's far more convenient. One last point. Sorry to interrupt you. There was a poll taken I read, and I read it with great disdain, that 60+% of Gen Zers say cash is cringe. No one takes cash. It's cringe, whatever the hell cringe means. But I'll tell you that we are moving to in that vicinity, that cashless society that we talk about, that always people laughed at. Yeah, that'll never happen. It is happening ever so slowly. And this will be another example of it. So you're right. I don't think there will be any opt-outing, and cash will be something that will go ultimately the way of the dodo bird, and it will just be gone, but not there yet.
What about any implications of the centralized control? So this is masquerading as a non-government program because it's going to be these stable coins are going to be offered by private companies or public companies. But however, they're going to all be following all these rules and enforcement and screening and every transaction and everything, every move you make, and whether you have access or not, whether it's withdrawn, if you say and do the wrong thing, associate with the wrong person. We've heard that before. What about the fact that all the people who are participating in this, if there's mass adoption, it sounds like that's the way that things are going, don't have a way of withdrawing something that they can actually hold in their hand. And as you say, there's no opting out. But gold and silver have provided that forever, since the beginning of time, in every country, in every millennium, in every regime. So what, do we know anything about, or any likely indicators of how this might impact the ability to transact using precious metals? As you were well connected with the people who were talking in, for example, Florida, about their electronic metals transacting rules that they just put in place. That seems to be a wave that's happening across multiple states right now. So where does this leave? Because there seems to be a disconnect here between this idea of a system that just gets people to be captive owners of U.S. debt and calling that new and newfangled because it's fast and expedient and not cringy. And then on the other hand, people who own traditional assets like gold and silver, or who have been accustomed to thinking that paper cash at least gives them some privacy. How do you see gold and silver cohabiting in this future world with stablecoins?
Same way that, well, similar. In Texas, they're kind of leading the charge on this. The idea is you take your American-made coins, you deliver them to a state-run depository. I don't know if it'll be the Texas Bullion Depository or someone different, but in essence, they will give you like a credit card or an app on your phone that you can then make purchases using it in a digital framework. I think the idea of going to a shopkeeper with Gold Eagle is probably not going to happen, but using those coins, which most of the laws specifically say American made, not all of them, but a lot of them do, held in a vault that you can then keep your purchasing power safe from the continued fall of the dollar in terms of its valuation, down 100% against silver this year, pretty damn well near it after today's run, and 70 plus on gold. Forget about the dollar index that says it's only down 7 or 8%. It's down 15 times that just about in terms of silver, and 12, 13 times in gold. And so you end up with a situation where you can use money, but it is done in a digital ecosystem, would be my guess. And maybe it's something like we saw recently in Italy, where, desperate governments do desperate things. They're saying, tax now or later, any gold, jewelry, or coins or bars that people have not declared in terms of, or there's, that no one knows about it, you can tell the Italian government now and pay your taxes now. Who knows what they do? Desperate governments do desperate things. I just think that you have to prepare the best you can, hope for the best, and be prepared for it not to work out that way. And what other choice do we have? I'd rather have options when others have none. But yeah, it is something certainly worth considering. And at that point, the United States loses all credibility as far as I'm concerned, if that ever happened. But look, they are forcing us into this digital surveillance state. Starts with the digital ID. Well, Trump already said that's what he wants, or passed that law for voting integrity, right? What is it? And again, I always butcher these, but Ben Franklin said something to the extent when you give up a freedom in the name of safety, you never get it back, right? Well, that's the freedom we're giving up because of the election integrity. You have to have a digital ID. That's the foray into the surveillance state. The next is the money. No, it's not a central bank digital currency. It's run by third-party entities. Oh, well, then we're safe, right? And you can see how we are quietly dropping the frog into the pot of lukewarm water and slowly turning up the heat. What it appears to me is that is where we are going, and you do the best you can to stay out of it, and everything that you're doing is legal. You got that on your side, and you hope for the best. it's a very small percentage of people that will have that ability. Maybe it's not worth it to rattle the bushes because most people wouldn't know a gold coin if it fell on their big toe.
We've also got a question from a viewer and subscriber who is interested in your take on the Japanese bond market. Our mutual friend Alistair McLeod has cautioned us for some time that the gearing that the Japanese banks have had to adopt because of their low yield, trying to make anything come out ahead, has gotten quite risky. But the Japanese bond market is a sovereign bond market. They were unable to defend their peg at near zero that they'd held for some time. What are you seeing, and what concerns do you have about it?
Well, I don't know if it's even defending anymore. It seems to me that this is what they want to do. This is their decision to do this by raising rates. The opinion is that they're going to raise rates again here in December and probably in January. And the truth of the matter is their economy is under serious pressure. And this could seriously affect global markets harder than people expect, because for years or decades, interest rates were kept near zero. And all of the money, whether it be Japanese pension funds or traders around the globe, would borrow, for example, yen at near zero, and then use the excess or use that free money to buy things like U.S. government bonds. And so there's over $1 trillion worth of these bonds that are owned by the Japanese pensions that are now, when you factor in the carrying costs and a rising yen and higher rates, these bonds are now basically underwater and they have to liquidate, and that's what they're doing. This kept the yen weak. It kept the dollar strong. It kept money flowing around the world, but it also is now coming home to roost, where these higher yields that you're seeing in Japan, along with inflation rising in Japan, they're under pressure to raise rates, and they're doing it, and that'll make the yen more expensive to borrow, which makes those already unprofitable carry trades even more unprofitable. And I think these funds and investors are now unwinding their positions. They're selling their bond holdings, and they're bringing everything back to Japan, which is going to put massive pressure on the bonds in existence and the currencies around the world, because it's been a piggy bank to the world where you could borrow at nothing and buy Nvidia, Bitcoin, treasuries, anything. And that has been, Japan needs to bring back this money to support its own economy. And it's going to start doing it by selling bonds. And the question is, how quickly will it unwind? Will it send the dollar crashing? Will it send rates spiking? And when you realize, again, going back to that same thing about trust, that the whole U.S., the whole system is already under pressure. I think this has the potential to trigger massive financial problems if the unwinding of the carry trade is anything other than orderly. And rates are going higher in Japan would be my belief.
That the analogy there of the bubble of everything that people have described, meaning the stocks, bonds, and real estate all being at all-time record valuations, not just in nominal prices, but in any other internal metric you use, just saying they're in, the affordability is just disconnected from reality. What you've just pointed out of this free money, free currency from Japan has been one of the, if this was a bubble, like a bouncy house, and this was one of these fans blowing into it, the Japanese free yens for the past, how long, more than a decade, has been like one of those big fans that blows air into the bouncy house to keep it inflated. Sounds like Japan's pulling the plug on that source of free money that's been helping to keep the bubble of everything inflated. People have, guests on our channel have warned us about the side effects. Once you start having a deflationary spiral where this artificially distorted misallocation of so-called money starts to unwind, that it can start to pull down all different parts of things. Any comments from you before we move on to the weekly specials?
Yeah, I mean, you mentioned a deflationary spiral, but in other words, what about inflation you're talking about? You measure any asset you can think of in terms of ounces of gold over the last 50 years, and prices are falling against gold, against the real measuring stick. Against the dollar, they're going the other direction, and it's that the dollar is falling too. And so it's a situation where you're right. Anytime you suppress interest rates, I think that's the issue that got the whole world into problems. You suppress interest rates, and that creates distortions and all of the asset prices that have never been allowed to find real price discovery. And it tells me that the assets that have been pushed higher, when real price discovery comes into picture in an environment of higher interest rates, it will be a religious experience for a lot of people. And at the same time, those assets that have been held down, conversely, like precious metals, it'll move in the other direction exponentially when they are free, not only from manipulation, as we're seeing the problems on COMEX and the LBMA. you manipulate prices for too long, the physical demand will put you out of business. It will bankrupt you. And I think the big money understands that. And on the other side, maybe this is why you see Buffett in 400 billion in cash, and why you see all the insiders selling every single week, 2 billion a week for the last, I don't know how long, and Bezos and Zuckerberg and all of these people selling. Maybe that's why, because they know what's coming. When price discovery really truly is allowed to manifest itself in a world where money isn't free anymore, and the ramifications of it start to profoundly expand. Yeah, very quickly, I think not only will you see those assets that are ridiculously priced start to deflate, but you will also see those that have been suppressed move much higher, as there are very few safe places left yet to go. And maybe that's why we're seeing these massive deliveries. The people at that level of wealth and sophistication don't do it just for the hell of it. They know what's coming. They're 2 or 3 steps ahead of everybody. That's why I would say do what they say, don't do what, or do what they do rather, don't do what they are saying. But it takes so much effort to figure that out, that if you're not researching the way you and I do every day, you won't even see it. And it will just be one of these things you'll wake up one morning and say, my God, can you believe how high gold and silver have gotten? In fact, I got one today. I got a text from my buddy, Steve. I call him Flip. And he says to me, I just saw the silver prices today. Wow. How high do you think it's going to go? I should have bought when you told me to at 22. Well, that's exactly what you're going to see happen. I think it's going to go much, much higher, and people will just wake up to a new reality. And at that point, the big money will have already been long since positioned.
You know, it's funny because some of the analysts who we have on that watch charts, and I'm thinking of Michael Oliver from Momentum Structural Analysis. He watches the momentum behind it and underneath the chart, and he says, that in his view, and this has to do with what Ed Steer has come on and talked about, the record short positions for as long as most people can remember, of silver and platinum for 2, and then gold for the 3rd on the COMEX. He said sometimes markets make mistakes, and we've had critical comments added by people saying, no, markets, I mean, you can't say they make mistakes. Markets are markets. You can't tell Mr. Market he's wrong. It's like, well, when they're getting lied to long enough, they can make mistakes. And all of a sudden, the emperor has no clothes on, and Michael says, you're just going to see a shift to a different reality. He says gold and silver are just going to be moved into a different space. He started rattling off example after example where this has happened before with other metals, where they'll bump along in a trading range for decades, and then all of a sudden, there's this awakening, and the range moves up by multiples, and that's the new normal. And people need to get used to it. And so those who are in place ahead of time will benefit from that. Those who are not won't. We've got the weekly specials here. I want to share this screen.
1/10 ounce gold, Canadian maple leafs. That's $60 over melt per coin. I like the maple leaf a lot. In the 10th ounce variety, any coin in the 10th ounce variety is preferred, except the premiums are higher than the 1 ounce, right? You take $60 times 10 for 10 1/10 ounces in a piece. It's a pretty high premium. However, if I had my druthers, I would rather have the flexibility and liquidity found in fractional coins than anything else. You have 10 transactions instead of 1. I have more 1/10 ounce coins than just about anything, although I've been buying them for 35 years. I love the 10th ounce coin, and to me, everyone should own some, period. The next is 1 ounce silver maple leafs, $4.49 over. Yeah, to me, the most preferred way would be Silver Eagles. Number 2, if we're talking sovereign coins, would be the Canadian maple leaf. Love it. Fantastic. Pure silver coin in the world. Number 3 is the 100 ounce Asahi bar at $3.45 over spot. Super high quality 100 ounce bar by Asahi, was owned by Johnson Matthey, who went out of business. Asahi bought them. I think they're made in Utah, Japanese country, making product here in the States. Super high quality, IRA approved, top of the line. Love them. But I would also say that, in all honesty, normally the spread should be higher between maple leafs and 100 ounce bars. This is because of the threat of tariffs. Now, they're U.S., but most of the other bars come from outside the U.S. Therefore, premiums on 100 ounce bars nationwide have gone much higher. I like the maple leaf better, or junk silver better, but a lot of people want 100 ounce bars, and this is as good as it gets. Now, the 1 ounce platinum maple leaf at $195 over. Platinum has been incredibly hard to get. U.S. Mint hasn't made any Platinum Eagles in over 3 years, and I think they don't plan on making any in 2026 either. Countries are making 50, 100,000 coins or less, and there aren't that many countries that are making it. You got Canada, Australia, Austria. That's all, maybe the UK, but there's a tiny, tiny, tiny amount of platinum available and has a very interesting, compelling argument. So I think everyone should own some. Getting them from the RCM, Royal Canadian Mint, is as good as it gets. If you want some platinum, get it, because it's becoming very, very difficult to get.
Well, Andy, we're always grateful for the very unique perspectives that you bring here, not only of the internals of the retail precious metal supply chain, but the geo-financial and monetary dynamics involved in the BRICS Plus and the shifting center of gravity of the precious metals markets from the west to the east. We're just grateful for you for also being a good sport and fielding some viewers' questions that were submitted here. That's always a lot of fun. And just wanted to thank you once again. Remind people how they can follow your new blog.
Yeah, we're almost up to 90,000 subscribers. I appreciate that. I mean, we started it in June, and it's last year. So it's going on it's about a year and a half. We're very proud of it, and we're glad Michelle is here with us to help supercharge it. And that's Miles Franklin Media on YouTube. And we have many of the same guests you do. And I think the people that you and I are talking to are telling a story of a new system that you're not going to hear on mainstream, and you're not going to hear from mainstream financial advisors who have been wrong and have yet to acquiesce to that reality. We've been right, and I think we will continue to be right. And the people that are on your show and on mine are to me, incredibly valuable, more so than most of the mainstream would ever give credibility for. So I appreciate the opportunity to be here with you, and the path that you have blazed with such a great show. I have tried my best to kind of do the same thing, and you're kind of a role model for me there. So appreciate it, and look forward to picking up where we left off next week. I'm sure there'll be lots to talk about in a world that is moving as fast as this one is.
Yeah, just a little sneak peek for those who are here with us today on the 1st of December. I'll be with you again on the 8th. I'll be traveling on the 15th. So my son, Kaiser, who has been with us on Ask the Broker sessions and on some of the Miles Franklin Mugs of Metals and other things together, will be interviewing you in my place for the weekly market update on the 15th. That's 2 weeks from now. 3 weeks from now, I'll be on the road, but I'll have a layover day. So I'm going to try to see if we can do a live stream. We'll see if that can work out in your schedule. Otherwise, we'll figure out how to get it done through one of my sons interviewing you in my stead. But it's going to be a time of a lot of changes and exciting times here for those who have been waiting a long time for the truth to start coming out, as it is starting to, about the difference between being in debt-based fiat currency that really isn't worth the paper it's printed on versus having something of true value. So, Andy, thank you.
It is coming out, Dunnigan. You're right. It is. And pleasure is mine, and thank you right back at you, and happy holidays to you and everyone out there. I'll look forward to doing just that, picking up with you, and hope you have a great rest of your day. And same to everyone out there. See you next week.
God bless you, Andy, and God bless every single one of you out there and your families. Thanks for watching, everyone.